The price of oil dipping below $1 a barrel, the previously unthinkable, which happened this week, shook financial markets, even though it has rebounded a bit. With more people at home because of concerns about contracting or spreading the coronavirus, the supply of oil is mounting, while demand is just not there. The impact of this is far-reaching. For perspective, I spoke with John Rogers, economics professor at American International College.
Well, this is a totally unprecedented situation, and it's pretty frightening in a lot of ways. But I think you need to keep in mind a couple of things. One is that we are in a crisis, obviously, because of Corona, but nobody's flying, nobody's driving, so there's no demand for oil. And we have something like in normal times 100 million barrels a day being consumed. It's now down to, I think, 70 million barrels a day. So there's just a mismatch between supply and demand, and that's what happens. Prices fall when you have that. The other thing to keep in mind, Carrie, is that oil is traded on commodity exchanges with futures contracts. So toward the end of the month, the futures traders kind of panic and they want to dump their contracts. So I think that's what happened last month, and that's what's happening again this month as we get to the end of the month. People are looking forward, and there's something called a contango where the future price actually goes below the current price, and people just want to get out of it. So and the third problem is storage. There just isn't enough storage. So people are saying, I don't want to own this, take possession of this oil if I don't know where to store it. So you've got a sort of an unhealthy combination of three factors working at the same time to drive the price down to really unheard of levels.
You talked a few minutes ago about consumption. That mark of about 100 million barrels a day was really kind of typical. And as you said, 70 million is where pretty much we are now. But do you think that that's hit a bottom, or are we going to go even below that as this pandemic continues?
Well, that's the big question, but I think there's some positive signs that economies are starting to open up. It's going to be several months before they really open up significantly, but at least we're maybe going in the right direction. And let's face it, even though everybody's trying to move to alternative energy, we're still highly dependent on fossil fuels, particularly oil and gas. So I think that will come back, but it's going to take a while, and it's also that's on the demand side, and it's going to take a while on the supply side. And the problem with a commodity like oil is it's, in economic terms, it's highly inelastic. So if the price goes up, people still have to buy it. So even during these oil crises, when the price is sky high, you still got to drive your car and factories still have to run. But the flip side of that is when the price goes down, there's no way for people to just start using more oil. They just don't need it. So that's the situation they're in, and that's what makes it difficult to adjust supply and demand.
Bloomberg had a report out this morning, and it said, quote, "The next chapter in the oil crisis is now inevitable. Great swaths of the petroleum industry are about to start shutting down." Do you agree with that word, that this is inevitable, an inevitable problem for us?
Well, I think you've had a boom in a couple of things. You've had a boom in the shale fracking in the United States for 10 or 15 years, and I think that works when the prices are $50 to $60 a barrel. Now they're obviously way below that. So a lot of those companies are going to either shut down or go out of business or be consolidated. OPEC is trying to cut back on their production and finally doing that. So I think you'll bring supply and demand into line. In the long term, the chairman of BP was talking about it this morning. There is a shift away from oil, and the oil industry has got to adjust to that, and that's a long-term process. But this is a short-term crisis we're facing right now.
To your point about that shift away from oil and gas, we've certainly seen push at educational institutions from students, administrators, for those larger institutions to divest in oil and gas. That's not new. We've been seeing that for several years now. But to your point about, the increase interest in the use of renewables, do you think the fact that this is happening now is going to even push that, accelerate that time frame?
Well, yes and no, because as oil is so inexpensive, that means it's just from purely economic point of view more attractive as a fuel than wind or solar or any alternatives. And so you might actually push that back a little bit because now, hey, do I want to pay a lot more just to be green, or the gas and oil is there at a very cheap price? Why don't I keep using that for a few more years? So it's a complex interplay of supply and demand.
If you zoom out, let's look more historically. I was thinking about the 2008, the Great Recession, and then the Great Depression, 1920s. Here we are, those two things had a gap of give or take 80 years. We've only had a decade or so since the Great Recession. So is this now, the economic problems we are experiencing now, even more dire because of that smaller window?
I don't think so. I think this is an induced recession. I mean, the economy was booming back in January. Stock market was all time high. People were very positive about the outlook for the global economy, and then we got hit with this health crisis and had to shut down the economy, almost sort of like a patient that you put him into a coma, and then you wake him up when he's better. And then he's hopefully back in business. I would think that's what's going to happen here once we figure this out and get through it and get the health issues sorted out. Vaccines, and I believe this herd mentality is kind of the current thinking that enough people will have it or have been exposed to it, and they'll be able to function, and you take care of the vulnerable population. We'll get back to business, and the economy itself should be able to pick up. I mean, it won't be seamless by any means, but all these people on furlough are ready to go back to work, and that's what we're hoping for. Now, it all depends on the health. If this is like 1918, 1919, the Spanish flu, which I guess persisted for the better part of 2 years, could be different. But I have a lot of faith in medicine and science. They've maybe sort of dropped the ball on the initial phases of this, but they're certainly working hard, and I think we're getting a handle on it, or in the process of getting a handle on it. It isn't there yet, but over the next couple of months, I think you'll see a lot of improvements.
To your point about people who are on furlough currently, who want to go back to work presumably pretty quickly as soon as possible, the opportunity affords itself. What about for those people who the company that they currently work for is going to go under, is not going to be there when they want to return to work? How are you in terms of being optimistic or pessimistic that those jobs are going to be there for those who want them when the time is right?
Sure, I think there's a lot of dislocation, and I don't mean to be overly optimistic, but I think it's like any economic shakeout. There are going to be opportunities for people to do the kinds of work, maybe in healthcare, maybe this whole work from home movement is going to require new technologies and people who know how to use them. So where you have dislocations, you also have new opportunities arising, and on the other hand, I think the service industries, where the vast majority of people are working, once those stores open up, once people can go shopping, once people can go out to dinner, uh, those things can come right back. I mean, they may be on a reduced rate for a while. If you look at what's going on now in Sweden, for example, people can still go out to dinner, can still go to the cafe. They don't go to large events, rock concerts, things like that. Probably aren't going to happen for a while. But daily life requires a lot of people to make it work, and I think those jobs will come back.
What do you think about the debt that at the federal government level that is going to be there waiting for us, given the stimulus that has been happening to the tune of several $trillion? What's the impact of that going to be?
That, I think, is the most disturbing long-term aspect. On the other hand, you do have very low interest rates, so the cost of money is, for all practical purposes, zero. And so the federal government can lock in the 10-year Treasury bond, which is sort of the benchmark rate, is down below 0.5%. They can lock in those 10-year loans at an effectively almost zero interest rate. So I think our federal government in the United States can probably handle it. I'm worried about some of the countries that we have the ability to borrow in dollars, and the dollar is an international currency, so it stays stable. But some of the other currencies, maybe not so much. They're going to have trouble managing, particularly if they've borrowed in other currencies than their own. When you borrow in your own currency, you can manipulate through inflation and taxes the payback. You can't do that if you're borrowing in somebody else's currency.